Hello and welcome to another episode of the Stock Market Today video. We're coming to you live as we typically do on a Friday to give you the week's wrap up and the day's wrap up and almost the end of the year wrap up here. So we're coming to you on December 26th, 2025. My name is Justin Nielsen and today I am joined by Ed Carson, our news editor, while Mike Webster is on a holiday, or actually probably just driving at this point. How you doing, Ed?
I'm doing all right. How are you?
Okay, it seemed like a little bit of a quiet day today, but you've got a few stocks that we can take a look at. What do you got for us?
I got Nvidia, Tesla, and Guardant Health.
Okay, very good. And while we do a quick recap on the market, we'll go through some charts here. I'll show the NASDAQ composite here, which was basically most of the indexes were basically flat. NASDAQ was down just a scotch, about 1/10%. The S&P 500 was going back and forth between positive and negative at the end here. It ended maybe just slightly negative. IWM, the Russell 2000, that was down a little bit more, 0.5%, as that comes back to its 21-day moving average line and the top of this base. The Dow Jones Industrial Average, that was down about 0.1% as well. So not much activity, a fairly tight spread between the high and the low today. What's your take on the market overall there, Ed?
Yeah, I'm not really paying too much attention to today because it was almost just like a blip. It was a strong week. It's like light volume day after Christmas. It's hard to take too much of it seriously, but the major indexes had a strong week. The S&P hit a new high. Hit a new high on Friday as well. Dow Jones hit a record close on Wednesday. NASDAQ is getting close. The breadth was just okay, and we saw the Russell 2000 give up some of its weekly gains, so it wasn't up much, but it was still up. So I don't know. It was pretty good week. It's been a strong little stretch. There was such a quick turnaround that for the whole market that really it really wasn't long. Like a week and a half ago, things were not looking good. And
especially AI, it was kind of like,
AI.
Is AI dead? It's like,
Yeah.
oh, have we moved on?
Have we moved on? But we were seeing on that day, that Wednesday, that we see the NASDAQ down, but the S&P was falling below. And you started seeing the Dow and the Russell were in the midst of multi-day losing streaks. So it was all starting to fade. And then it was like, nope, never mind. It's just that it was a Princess Bride nearly dead and just had to didn't Miracle Max or something. Anyway, so now we're in a good position. I don't know if you want to do a whole lot right now at the end of the year.
Right.
If you're significantly invested, yeah, it's a Santa Claus rally. Maybe that doesn't have to happen. And sometimes there's heavier selling once we get into January as people sell their big winners for not having to pay taxes on it. But it just seems like things are in a good situation. People should be looking for setups. I think honestly, pausing right here would be great. If the NASDAQ could sort of pause right at these levels next week and then get through early next year and didn't take off. That would be ideal. Who knows what the market will do, but things are looking good. Just really, really impressive little stretch here.
Yeah. And I think the big news for, at least on the technical side, we did get that, back above the 50-day moving average line, back above the 21-day moving average line. On Monday, the low cleared both of those lines for the NASDAQ, and we got a little bit of a follow-up on that. So I think that was kind of the positive action. Wednesday, of course, a very minor day. Today, a very minor day. Volume, you can't really pay too much attention there. Wednesday was a half day. Today, the day, it's Boxing Day. It's, a lot of people are not really paying too much attention to the market at this point, heading into a weekend with just one day between our Christmas holiday and the next week. So hard to make too much of it. But yeah, as you said, S&P 500 right there at highs, and that's pretty impressive again, considering how, back here in October, we got this ugly day. Back here in November, we got this ugly day. And even this breach of the 50-day moving average line, could have gone a lot worse, right? We
Yeah.
could have come in a lot more, but we didn't. And I think that's the story here. Now, before we go too far, let's take a look at RSP, which is the Invesco S&P 500 ETF. This was up, just slightly. It was basically S&P 500, flat on the a little bit on the downside. This was flat a little bit on the upside, but it does seem like the breadth overall has been fairly impressive. And whereas the IWM, the Russell 2000, has come in a little bit this week after Monday, RSP seems to be holding up a lot better. The RSP and Russell 2000 seem like they were kind of going in tandem with each other, but RSP seems like it's holding up a little bit better to me. What do you think?
It definitely is. I mean, it is holding up better. Yeah, and it's just so the breadth was fine. It wasn't great. I mean, it's not like we're tremendous. That was the thing, but we're right there at highs. All of these indexes are right at highs. I mean, I also wouldn't take that much to go to the 50-day line again if
Hmm.
things are bad. But yeah, everything's working out pretty well. I mean, yeah, Nvidia, which we'll look at, that was really strong this week, and we had a few of them. Google was strong, and there's few mega caps were doing that. But as you said, like RSB, QQEW, which is still pretty big. I mean, it's the 100 biggest
Right.
non-financial. So we're not talking about minnows here, but that was up, and that had a solid week. So yeah, I mean, there were definitely stocks that were flashing buy signals. There have been really this whole stretch ever since that last Wednesday that things have turned considerably better over that stretch.
Yeah, no, absolutely. Just a few other areas to kind of look for before we go into our usual sector ETF analysis. Um, let's highlight SMH. You mentioned Nvidia, and we'll cover that in more depth in a little bit. But the VanEck Semiconductor ETF, this has really come back strongly. Again, it looked like this was potentially getting in some trouble here as it just was getting knocked down day after day after day. Um, is the rebound balancing out that downside that we saw just last week?
It does seem to be. I mean, for me, it is, and it's not just Nvidia. There's Micron that's doing well. There's a few names that are in there. Micron is a big part of this, and that one really took off. So, I mean, there's a strong argument. I think that you could say SMH is the way to go. If you say
Hmm.
like, I don't want the single stock risk. Nvidia is working right. Taiwan Semi is working right. Micron. Some of the non-AI chip makers are doing pretty well, like Analog Devices. I mean, they're not huge weights anymore, but there's definitely some stuff going on out there that has been doing so. I think SMH is a good way to play the chips right now. Though I will when we get to Nvidia, nobody could argue against that giant
Hmm.
either.
Right, right.
But yeah, I think that looks pretty good, and that I think this will. But look, IGV does not look very good still,
Hmm.
and that one's still struggling. That's still below the 50-day line. ARC, which I think of is a pretty good measure for like more speculative or more high beta names, still below the 50-day line. Obviously, some names are not. Like Tesla's the biggest weight in there. Tesla's near highs, and we'll get to Tesla, but ARC is not. I mean, so it just sort of it's SMH is clearly still looking very good. That's really like, I mean, we were worried about AI, but at the end of the day, the chips are still among the strongest parts of the chips of the tech sector.
Hmm. And as we often do, is let's go ahead and take a look at the 10-year Treasury yield. It's certainly kind of just been going a little bit of back and forth here lately. So is there much that you can make out of this right now? Seems like kind of a toss up, day by day.
Yeah, it is. I think that's the way to put it. There was some strong GDP data, but like some of the other reports we've had, it's just there's little things about it that you're not 100% sure on. It still looks pretty well. The numbers, it probably wasn't as strong as the headline number, but it was still solid. I think we're going to be maybe in a holding pattern. We don't really know how the economy is doing, with inflation and jobs, overall economic growth, some mixed signals, mixed data. So I think the bond market's probably wondering what's going to happen. Maybe it may be until we get the January data that we start feeling more comfortable with
Hmm.
how things really are.
And is that, do you think, because the shutdown
Yeah,
kind
because of
of,
the shutdown. I
right,
think, and
exactly.
they had to make some guesses, like the CPI, they had to make some guesses, and then there was also in the GDP report, which is old Q3 data. There's weird things like video game things, and like there were some weird things in there that threw off things back and forth on both sides.
Hmm. Um, we're going to do something a little different on the sectors here. We're going to go with the weekly gain, and just see how
Something
things
to
ended
talk
up.
about there. Yeah.
And we'll start with the worst first. So let's go ahead and start with Jets. Surprisingly, this was really looking strong, but it really didn't participate this week. So I think it brings into question, this sector rotation has been a little tough. You think the market's going one way, and then it doesn't really kind of continue, but overall, you look at the weekly chart, and it's hard to say, even though this was maybe one of the worst sectors for the week, it's still, you had this really strong move off, so it doesn't certainly seem like it's in trouble.
No, it almost looks like a 3 weeks tight. I didn't look at last week's move, but that could be almost a 3 weeks tight.
Hmm.
After a strong move, that almost seems bullish
Hmm.
in that.
Yeah, and then you already mentioned ARC K, which was down a little bit for the week, getting that potential resistance at the 10-week moving average line or 50-day moving average line. Another area that didn't do so great this week, and this is kind of the way we like it, staples.
Yeah.
You kind of, if you are seeing strength in the market, especially in the growth area, you really don't want to see the XLP consumer staples do particularly well. This seems like it's getting resistance right there at 80 and at its 40-week moving average line. Let's talk a little bit about IBIT. This actually ended up for the week, but still very damaged.
Yeah, and every time it hasn't been able to get above the 21-day line at all, and which has been falling. So just hasn't been able to do it. Now, I would also caution this seems to make weekend moves or moves overnight, and then those moves can just disappear in a few seconds in regular session trade. So yeah, until this gets up, and there's a lot of crypto related stocks, and until this rebounds, doesn't have to get to record highs, but have some real momentum, that a lot of those stocks are going to be under pressure too.
Yeah, totally makes sense. Another area is, again, something we'll get to it a little bit, XLY, which consumer discretionary, but one of the big components here is Tesla. That's about a 20% weight, and along with Amazon together, those are about 40%. It's worth noting. Okay, here's the XLY on the daily, coming out of this double bottom. RSPD, which is the equal weighted version of this, also coming out of a double bottom, maybe not as strong, but not falling apart. So it's not like this is just Tesla holding everything together. XLY, holding up pretty well.
Yeah, I mean, consumers, there's still some strength there, especially on the higher end. So, and that's where the discretionary spending tends to do well.
Yeah. So we've been talking about on the something I mentioned on IBD Live this morning, Tapestry, which is the Coach bags, Ralph Lauren to a certain degree. And I mean, I was looking, we've been talking about AEO, American Eagle Outfitters, and ANF, the Abercrombie and Fitch, both, doing fairly well in the consumer discretionary, and a lot of talk about XRT, kind of setting up here. But moving on to energy, XLE, this was up a little bit, just 0.2%. So not one of the strongest sectors, still below its 50-day moving average line. This is probably a bad price here due to the split. But gosh, it just seems like it keeps on going back and forth and hasn't really trended for the last month here.
Yeah, I mean, energy stocks are just so tough, and energy prices really aren't doing particularly well. There was a little blips that you get, and so some of the names were coming up a few weeks ago, but that's over
Mhm.
for the short run at least.
Something we were calling the AI adjacent for a while here is the utility space. This is still below its 50-day moving average line. Again, usually more defensive, but we certainly saw a lot of participation by the utility names. Again, as power, the distribution, manufacture of power, all of that was coming into the forefront in terms of the energy needs of AI and data centers and what have you. Also, XLRE, which tends to be a little bit more defensive. This is still below the 200-day moving average line and the
That
50-day
relative
moving average
strength
line.
is not great.
Yeah,
I mean,
right,
it's
exactly. And there have been kind of these glimmers of hope, sometimes where we've looked at ITB, the home builders, and it looked like that was getting above the 50-day moving average line, maybe making a comeback, but that just kind of petered out. Nothing really came of it. We talked about RSP, the equal weighted, XLV, the healthcare area. This seems like it's set up in kind of a overall pattern here, a very long saucer with a handle getting tacked on and support at the 10-week moving average line. So that's been looking a little bit better. XLI, relative strength not great lately on this as it's gone flat, but maybe perking up a little bit. We'll see on that one. QQEW, which we also mentioned, that was up, nicely, as was the Qs, both about, equal in terms of their gains for the week, maybe a tenth of a percent off. And then XLC, whoop, let me do that again. XLC, one more time. XLC. Okay. The the communications area. This is Meta and Google, or Alphabet, I should say, the parent company, together, and a nice double bottom. Looks like it's gotten a handle tacked on there. Um, Very interesting, since Meta has looked so poor, being down below its 40-week moving average line, whereas Alphabet has looked so much stronger than so many of the Mag 7 lately.
Yeah, I mean, everybody realized that AI was a strength, not a weakness,
Hmm.
and they seem to be able to either turn out they're going to make money off of it, or the perception is they're going to make money off of it. Whereas Meta, they're spending so much money on it, and maybe people just aren't seeing the same payoff. But yeah, I said SMH was a good way to play the sector. I'd say Google's a better way to play that. That's such a hot and cold. There's such a difference
Hmm.
between that and what the ETF is, and obviously Meta.
Hmm. Yeah, absolutely. XBI, we talked about healthcare, and one of the stronger areas this week was XBI, the biotech area. I actually wrote a column on that for Swing Trader. This was offering another entry after we had a nice move on this one in Swing Trader. This is also a leaderboard position, so that's been doing fairly well. KBWB, so the banks. You know, whether it's Goldman Sachs or Morgan Stanley, these seem to have come up recently and held up pretty well.
The economy seems to be better than people expect, and there's a wider yield spread, and there's a lot of deal making, it seems like. So there's just a lot of little things, a lot of the big banks and including foreign banks too, that they're just doing pretty well right now. They're not amazing, but anybody taking, like, especially when you consider the last few months where there have been some real herky jerky moves in the tech space, these have done really well over that period.
Mhm. And XLK, the tech space, as you mentioned, it was certainly getting clobbered quite a bit last week, and down here in the beginning of November. But this now looks like it's setting up with a base. So very, very different look here. Prospects much stronger after a very strong week, following up on the bounce last week. So that's been looking good. XLF in the financial space, that is also broken out and continued moving higher this week. One of the better performing sectors. SPY, that we talked about, getting to new highs very nicely. FNGS, so again, one of those areas not dead yet. So even though this is coming up to the 50-day moving average line, could get turned away there. It got support right here at the lows in November, came right down to there, got support, and seems to be bouncing up, and was very strong for the week. XLB materials, that one was also strong this week. One of the stronger areas, actually, and this has been kind of cobbling together a nice move with the relative strength still below its moving averages, but perking up above its short-term moving average recently, and looking a little bit stronger. What do you take that for on the materials side?
I mean, there seems to be just, like, actual tangible goods seem to be doing pretty well, like raw stuff or semi-raw. Like you look at XME and obviously gold and all that, copper, they're all doing well. So there just seems to be that kind of situation right now, that those areas of the market have been strong.
So yeah, and XME was kind of on next on our list. This is such a hodgepodge of stuff. You've got the coal in there, you've got the gold, you've got the silver, you've got steel, you got copper, aluminum, a little bit of everything. But this has certainly been a very strong move the last month here. So that's been interesting to see. ITA, the aerospace and defense, also kind of carving out the little base here. So that's been interesting. SMH that we talked about, that is one of the stronger areas for the week. Again, a really strong move that started on Monday and just kind of edged up higher each day this week, which was nice. FFTY, our growth kind of indicator, this getting back up to the 50-day moving average line after a strong move Friday and a gap up on Monday. Didn't really make much more progress from Monday, but held the gains, which that's a win right there. The gold miners also doing very well. This is where a lot of the strength was, and I'm going to go ahead and add platinum just for fun here because that one has just gone crazy here lately. But that's the physical right there. Gold, no slouch. That was up 4.4% for the week. What's happening with the silver, the gold, the platinum, palladium, you name it?
There seem to be physical shortages in many cases. I mean, there's certain things I think that just Europe and the US moving more towards uh, more ICE vehicles like traditional gas guzzling cars. Well, that needs more catalytic converters and some things like that. So there's some of those things in there. But yeah, so that's obviously some of that. It's not gold, but it just seems like there's just demand. The Fed seems likely the next moves will be cutting rates. It just this momentum's still there. There's probably still uncertainty about everything. So the combination of lower rates and maybe just uncertainty about where we are has really driven gold up. It is interesting how strong gold has been versus Bitcoin having a not very good year
Right.
after what you would have thought, especially the dollar's weak. You would have thought, okay, Bitcoin was doing very well. I mean, it was fine, it's like, but it's really sold off for whatever reason. And gold has not. Gold has just taken off. It's at the end of the day, it's still gold
Mhm.
and it's still silver and these other precious metals slash industrial metals really
Mhm.
doing well.
Well, and that is something, as you noted, both silver and platinum do have those industrial uses. I mean, on the catalytic converter side, of course, everyone's talking about, Ford and, a lot of these big companies that are saying, hey, you know what, we're going to back away from some of this EV stuff that we've been doing. So yeah, very interesting for both of those. Again, those industrial uses that happen, not just the shiny metal that is purdy for your jewelry. Let's go ahead and move on from the sectors and get into some individual stocks, shall we? And we can start with Nvidia. I do have a position in this myself. We do have this on Swing Trader. I should have also mentioned I do have a position in GDX. I forgot to mention that as we were discussing that. But Nvidia back above the 50-day moving average line this week. Certainly the relative strength has been nothing to write home about for a while, but this is looking potentially set up.
Yeah, this was one of the big winners of the week. So it wasn't right there when it came on because I made a decent move last week, but it was still below the 50-day line, still, considerably. But strong move this week. There was positive signs like a report that the some more advanced chip sales will resume in China. And then later in the week, Nvidia appears to have made one of these $20 billion, don't call it a takeover, where they get the IP and they get the key talent, but don't technically buy it out. And so that has pushed it up. It's to me, it's actionable from getting above the 50-day line. I suppose you could also argue, I think there was like 188 was an interesting area. That was like a short-term high. That was when it, like a week or two before that. I think another area, it's another area you could buy it is 196.
Mm,
That's the reversal day on November 20th. Both of them. So that's the thing. There's the November 20th reversal day from after earnings, and then the October 10th reversal day is essentially there. So that seems to be a key area to get above that. The growth is still strong. We've had accelerating EPS growth the last 2 quarters. Sales growth picked up. So it's a little bit like, can it keep going? Can it keep going? And then it picks up again. It's like it was slowing for a little bit, and then you picked up again. Now, some of that's because there were some Blackwell difficulties initially, like early in the year, and now that has been resolved, and they always got to move that on. But it still seems like this is the giant. It's done this before. If you go to a weekly, that doesn't mean it has to end here, but it's, in the midst of all these huge moves, it had a long pause, really, ultimately like about a year long, from mid 2024 to mid 2025, where it went sideways. I mean, in very up and down fashion. So maybe that's what's been going on here. But still a real thing. It's still real strong. It's not that richly valued, either, despite having this enormous run that the earnings have come in. So it's still a lot to like about this name.
Hmm. No, absolutely. And then let's take a look at another mega cap, Tesla. A lot of talk again. The deadline of end of year is coming quickly for less safety drivers being in the Austin Teslas. So what do you see going on here?
That's a big thing. I mean, Musk has said for the decade, this year, next year for self-driving, but normally it's like, oh, it's he's saying that's 6 months away, 9 months
Hmm.
away, but he's been saying it just a couple of weeks ago. I mean, so if they don't do it relatively soon, maybe this time it could be negative. On the other times, so I think that's obviously a big reason why the stock has gone up is all those hopes. I mean, but if they don't, if it's January, if it's February, so we'll see. We've seen some videos unsupervised. We'll see how that goes because we don't know if it's really unsupervised. There's probably another car nearby and there might be a safety monitor in there. We don't know. We don't know.
Hmm.
So when they start putting those out in numbers, that's the real test. Because that's what I need. We're also next week. So that's the end of the week. And then on Friday, we're almost certainly going to get on January 2nd, we'll get the Q4 and 2025 deliveries. And now again, I don't they're going to be down versus a year earlier, both for the quarter and for the year. I don't know exactly. There's a lot of things that have been going on. I don't think people have paid too much attention to it. I don't know. I mean, if they're a little stronger, a little weaker than expected, I don't know if it'll really matter because all the valuation or 90+% of the valuation is on self-driving or other things like that. But yeah, so it'll be interesting. That's the other thing is that looking ahead is like, this is the tough spot. You can buy it here, but at the same time, there is that deadline. How will the stock
Right.
market react? It's a huge thing over the next few couple of weeks. And then it's just beyond all that. Then there's already the issue with all the stocks. It's like, well, what happens, say, on June, July, and January 10th, like when we get tax selling, kind of thing, like people who
Mhm.
took the run up from, April to, it didn't have a great year, but anybody who bought at the lows, they've doubled their money. So
Mhm.
they might have decided, I'm going to sell some of my stock. I mean, again, that's with all these names, but there's a lot of those things. But when you add all those things, just saying that there's a lot of potential things, when we say like, hey, this is 5 days away from earnings,
Yeah.
but we're 5 days away from when Musk says everything will change and this will be the most amazing thing ever. So that could be the catalyst for huge gains, but huge losses along with other things that'll be coming up. So again, that's we'll see. But technically, nice action. Yeah, it dipped this week, but after a big gain last week, high volume, held the buy point. I think pausing here is really the best thing. It'd be great, I think, if it could pause for a couple more weeks,
Mhm.
and maybe get through that, or at least pause until we get some kind of resolution in the market's mind, at least about that, and it can take off or fall back. And if that way, if you're not in it, then if it falls off, well, then who cares? And if it takes off, you can get into it.
Yeah. I feel like this is one of those cases where you could give me the headline today, and I would screw it up. I feel like, knowing the headline in this case doesn't necessarily help. It's one of those where it's the reaction because we've seen so many cases where, a company, the expectations are built up, and then the news comes out. And even though it's like, oh, this is what we expected, it falls apart afterwards, the sell the news idea. So yeah, this is one where it's hard for me to get too excited about doing anything with those things that overhang, because I feel
There's a
like
lot of overhang, and
even
it could
knowing
be
the
very
headline.
positive ultimately.
Yeah.
It could be
Yeah.
very positive, but
Hmm.
it is such an enormous thing. I just don't think that people recognize just how, I mean, it's hard to convey how big, and yet it could be a nothing burger. Nothing may happen, and it could be January 15th, and no sign that self-driving robotaxis will really be out there, and the stock might still be rising. I
Yeah.
mean, so it's not like you may know not just the headline, you may know the news. You may know the news a month from now, and you still wouldn't get this right. I mean, so yeah, that's it, and yeah, absolutely.
Yeah. Let's go ahead and round it out with a medical stock, Guardant Health. This had such a strong move. And again, I'm kicking myself because I think I sold right on this day. I didn't have cushion ahead of earnings. And so I'm like, okay, well, I don't want to roll the dice.
Yeah.
And well, that one just went up without me. And it had this really nice pause, popped again, and now it's paused and just really hugged this 21-day moving average line. So it does seem like it's gotten back above 100 and looks like it's trying to stay there.
That's really great action. Again, having that huge move, and especially given how the markets had some sell-offs, this one held up very well. I mean, this is a money-losing, high beta name, and you certainly could have justified a much bigger sell-off, certainly to the 50-day line or, kind of thing or worse. And so, yeah, great action here. The revenue growth has been picking up. The losses are getting smaller. It's still going to be losing money for a while. That's for sure. It's working on a new base. Probably needs another at least another week for a base. It would be it probably could be a flat base. I've done the math. It's very close to being within
Hmm.
15%. So maybe in another week, you would have flat base. The 10-week line is catching up to a certain extent. It's still 5% above the 10-week line, but that 10 week, but it's racing up. So that's going to go up several points.
Yeah, right.
That 10-week line is likely to get up to 100 plus just starting on Monday. So yeah, that one again, just such strong action. I think afterward, uh, when you can do that, because it's providing an opportunity. It's not shaking people out really, but it's providing another opportunity to get in there. And I think if it shows any strength from here, it could be actionable because there's sort of a downward sloping trend line, and it's right at these short-term highs. I'd say almost at today's high, it was basically there.
Hmm.
But that's yeah, it's right there. But it's like just from the top of that emerging base or sort of a downward sloping trend line. I think you would probably could just
Yeah.
yeah, sort of right in there. So it's probably sort of could be actionable. I'd just like to see maybe get above today's high, and that could be something that could be actionable. Again, next week is going to be really light in general, or very individual stocks may have, but individual stocks may have big moves. The market may have really tiny moves, but we definitely seen this past few days that I've seen some stocks have some big daily moves on no real news
Yeah.
because it's just sort of thin. And if you have a little bit of an excess of buyers or sellers, that can really make a difference at this time of year.
Absolutely. Yeah. The with not as many participants, you can one participant has a little bit more sway if they want to come in with some size. And I feel like you've hit on some big themes with these stocks that you've chosen. I mean, between AI, Nvidia, chips, self-driving, and everything that has to do with that with Tesla, and then cancer diagnostics. I mean, that's a big deal right now in terms of some of the companies that are doing very innovative things on the cancer side. So you got a little bit of everything. So well done, Ed, to wrap this one up. And speaking of wrapping it up, let's go ahead and just kind of give an overview for next week. As you mentioned, look, we're not expecting any earth-shattering movement here. There's a lot of kind of back and forth that typically happens. Yes, there is the so-called Santa Claus rally that people talk about. The original kind of owner of that was Yale Hirsch of the Stock Traders Almanac, which he usually looked at as an indicator of, okay, what does it do for those last, the final days of the year and the first couple days of the new year, just as an indicator of what the next year could potentially portend. But there's a lot of statistics out there of what to expect, and that doesn't necessarily help you in the moment sometimes.
Yeah, I mean, I think you just have to look at what the market is doing, not look at these kind of farmer's almanac type of
Mhm.
predictions. The market's acting well right now. I mean,
Mhm.
but it's just sort of, and I try not to look too far ahead. It's like it's one thing. Okay, if the market's setting up that's may say, oh, it looks potential. Like if we move out from here, you could definitely think, well, that may be another leg that could go on for a while. But you just have to act in the here and now, and if the market turns, you switch that around. But I think things are going pretty well. I think that, it is potential. I mean, I don't talk about taxes very often, but if you did like hold on to a big loser for much of the year and you shouldn't have, but you did,
Hmm.
and you have other decent gains, you could always finish it. Well, maybe this is the time finally to get rid of that name,
Yeah.
kind of thing. I'm not talking about selling stocks that are down 2% and they look solid.
Right.
But just started thinking, but yeah, the market is in good shape, and right now, and that can change, come Monday. But right now, I think you just have to see how things are doing, and the indexes and leading stocks are acting well, and aerospace is acting well, banks are acting well. There's a lot of things out there that are acting well. And so I think portfolios and watch lists should reflect that. Okay, yeah,
Hmm.
growth has had a good name, but don't just go into the mega caps. Don't just go into AI. Uh, Certainly don't just go into high beta names like, because ARC and FFTY and some of those things are still on the wrong side of 50. So try to look. This is a good time to be fairly diversified in your leadership, not just by diversified for diversified sakes, but buying diversified stocks that are really doing well. And there are a lot that are doing well.
Yeah, very good point. I mean, certainly one of the things that dominated the past 2 years was the Magnificent Seven, the FANG
Absolutely.
stocks, and you could see that if we look at a monthly chart, how the relative strength of these just completely overpowering from 2023, 2024 after the 2022 bear market. But if you take a look at some of the like we often look at the uh, GM. Oh, G. What is it? GM. I just blanked on what this.
GM,
Oh, you know
I
what?
write it.
I'm on the wrong
Yeah, the wrong
thing.
date. Yeah, yeah.
Uh,
GMIAA. Yeah.
GMIAA. There we go. Yeah. Just so people know, you have to be on the daily chart. You can't do it on the monthly chart. But this 10-day moving average of your advanced decline line. This is the NYSE here. This has certainly looked a lot better this year. A lot more breadth coming in, and for the Nasdaq GMIAB, that one has also not improved as much as the NYSE, but still uh, much better than it has been over the last couple years. So that's a positive as well. But if you look at some of the other market indicators, NASDQ, there has been a lot of back and forth between the highs and the lows, new highs and new lows, kind of taking turns in that leadership, and that's the choppiness that we've kind of seen this last quarter, and that's a little bit tougher to do. We saw that last year as well, in terms of breadth issues, but it certainly seems to be a little bit better now, if you ask me.
And I think over this weekend, and there'll be the holiday weekend, sort of like long periods in there. It's a good time to look back at your past trades, and you don't have to do it at the year end. You could do it whenever. You can do it at the end of rallies, other things. But look back and just see, like, what were your big winners, what were your big losers, what were
Hmm.
the stocks you missed out on. And sometimes it's okay to miss out those ones because the stocks didn't look quite right and they took off, and maybe you say, well, maybe I should have or found a way to get in. But see what you can do so you can learn to like, what kind of things, how can I improve things. I mean, there was definitely things like, I've had a decent year, but I feel like if I did a couple things differently,
Yeah.
I would have had
Yeah.
a much better year. And
Right.
and to
Hmm.
what extent is that because I made mistakes? Well, that's definitely true. What times it's just that the market wasn't right for me, and I followed my rules and things still didn't work out.
Hmm.
But whatever it is, and like, well, then does that mean that those rules need to change or what have you? Just sort of evaluate it, try to do it. Like, it's much easier to look at it in hindsight. Oh, remember that stock that you sweated over and now you can't even remember its name? Yeah, go over that trade now.
Hmm.
Those kind of things. I just think that's really important. Looking back so that you can set up to have a better 2026.
Yeah, there's so much of a benefit to doing that post analysis. So, yeah, folks, while you do your New Year's resolutions, make one of those resolutions to kind of learn, get better. And again, it's not about making no mistakes. It's about kind of, at least for me, getting rid of stupid mistakes.
Yes.
That can do a lot of good for your portfolio. Just getting rid of stupid mistakes, and then making sure you're following your process. The outcome might not always be great, or
Hmm.
positive, but if you're following your process and you've got a system that has a long-term winning potential, then the process becomes sometimes more important than the outcome, because no system is going to be 100% on all the time. But as long as you're cutting your losses, not taking too big of a hit when your system is out of favor, and really kind of recognizing when your system is in favor and being more aggressive. That's the way to really kind of compound those gains for a big, long-term, game-changing portfolio that can really make a big difference in your life. And that's hopefully what we're all here to do. So, thank you very much for your thoughts here, Ed Carson. I really appreciate it, and hope you have a great weekend.
You too.
Okay. That's going to wrap it up for us this week. Thank you so much for watching. And don't forget, we will be back next week, starting with IBD Live in the morning, 10 minutes before the open. All beyond that, Dave, our Hatman Chung, will be hosting that day, and we'll be going through things. And then, of course, on the Stock Market Today video, we'll be coming back at you at the end of the day at the close. On the podcast next week, we're going to have David Hatman Chung as our guest. So be in tune for that. And then hope everyone has happy holidays, and look forward to the new year with you all. Thanks a lot for watching. We'll see you next time. Bye now.